Okay, hello and good morning, everyone. Welcome to Daily Pitch International from Easy Markets here. Guys, hello. Sorry, I stalled there a little bit, but hello, everyone. Hello, welcome. I hope you're all feeling nice and fresh. Today is the mid of this week. Or maybe some of you already wish this week could end. Well, what can I say? Yeah, we're all different. We all have different lives. Yes, so some have an easier week, some have a more difficult one. So, if the first half of this week was a little bit of a difficult one for you guys, so I feel for you, man. I feel for you. Anyway, me talking here, stuff which is irrelevant to the market. I think let's leave that for now. Now, first, let's before we start jumping into the charts, just a quick mentioning of our risk disclaimers. So, yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear here from the screen a little bit, and I'll be back in a bit. Okay, now then, guys, before we jump into the charts, I just wanted to kind of say thank you to everybody who attended yesterday's session with where I had a special guest on my show, Mr. Jin Dao Tai. So yes, if you liked it, I mean, if you've missed it, first of all, if you've missed it, then you can watch it as a recorded session on our page. And on our page in TradingView, it's going to be sitting there in the stream section. Yes, but yes, guys. I mean, if you joined, I really appreciate that. Thank you very much. Yeah, I think it was a very nice show where we talked. It was kind of a casual, chilled, session. So, yeah. And just to let you know that we will have another like that casual, chilled session, which will be on the 16th of January. So the same time as this webinar, basically. Let me actually, I'll remove myself from the screen a little bit. So yes, you can see now the full picture. So yes, we will have another session, and hopefully you will like this one as well. That's coming up next Tuesday again, the same time as this webinar. So I think, like, yes, as I said, I think you will like it as well. We'll just have, like I said, a chilled session, a chill talk about the markets. So yeah, join us and enjoy. Look, guys, let me just bring myself back here into the screen. Before we also jump into the charts, the quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, you can always reach out to us. And yes, I believe we'll try to answer all your questions. If you have any, we'll try to assist you. I mean, if we don't know how to assist you, we'll find a way how to assist you. So, look, just bear with me one moment. I need to switch on the aircon here a little bit because it's getting a little bit stuffy. I'll be right back with you guys. Oh, there we go. So now we can work. Okay, so before we actually no, there's nothing else to discuss, nothing else to mention. Let's jump into the charts, guys. The first one, as always, Nikkei 225, and look at this animal. boom, it exploded to the upside yesterday. It popped higher, and look, this is what I talked about. I said to you that I need to see a nice good push above the 33,868 territory right here in order to start looking at some higher levels. Then as well, the 34,033 territory right here is also a nice good barrier, which if gets broken, could open the door towards higher levels, because a forthcoming higher high will be confirmed. And there we go. We went there, and we are now like, yes, I mean, we're clearing this territory. This is not the all-time high, just because I don't really have much history here on our chart, but we can have a look at maybe trading views. Let me just see if we do have the trading view. There we go. I think this one is the one. There we go. Yes. So, yes, we popped, we cleared that barrier, and yes, I mean, this is not the all-time high. As I said, the all-time high was back here in the 90s when the tech bubble, kind of before the collapse of the tech bubble, because as you can see, this was a major decline here. So, yeah. Yes, I mean, at the moment, I think that we're kind of heading towards maybe the same thing. Look, yesterday, I think the tech in the US performed quite well, or relatively well. I think that, yes, the NASDAQ managed to remain in positive territory. Okay, look. Now, what I'm saying here is that if you're looking for some higher levels on this one, let me just go back into my chart. So if you're looking at some higher levels on this one, then basically, yes, we could still go to the upside. We could aim actually for something like, let me just go back into Nikkei, that one. So we can aim for something like the midpoint, or should I say the inside swing low here, of the what's the date here, the 1st of January of 1990. There we go. So, or should I say that's the lowest point of January of 1990. There we go. That's monthly chart here. So we could aim for that one. So the lowest point of January of 1990 could be the next target. And yes, I mean, at the moment, I mean, look, on this chart, it's a different level because I'm looking at on my chart, are the futures. But in general, doesn't matter which, what pricing do you have. Just basically what I'm aiming is the lowest point of January of 1919. That's why I keep on saying, I keep on mentioning these dates, because then, of course, if that gets cleared, then the next target is the all-time high, which was reached back in December, if I'm not mistaken. Yep, the December of 1989. I mean, talk about a curve, right? This took us a while. So we had the bottom here in 2008, and since 2008, this has been on a cruise, just cruising to the upside. I mean, look at this. And some of you might say, hey, maybe this is going to end up being as like a nice double top pattern. Yes, true. Could be the case. But guys, ladies and gentlemen, let's not rush into this yet. So first, let's go slowly on this. And if I actually, let's say, ignore the lowest point of January of 1990 as the next potential target, then I will look at it from the other perspective. Let me just jump back into my chart and and my daily chart. So what I'm going to look at here is I'm going to grab my Fibonacci extension, and I'm going to draw it from maybe somewhere around here. Now, this is the point where it's a little bit subjective. It's not really objective, but a little bit subjective. So you take it from around here, which is the lowest point of January of 2023, drag it to the highest point of June of 2023, and to the lowest point of October 2023, and you'll see that we are currently beautifully getting a hold up near the 50% here on my Fibonacci extension. Talk about coincidence, right? And this is just magnificent. So what's next? Well, next is, of course, yes, we need to see if we can get a nice good push further north, and for that we need to see a push above that 34,513 or 500 zone actually. If we stay above that, then yes, I will go further north, guys. So yeah, that's my game plan with Nikkei in general. This pop, if you're wondering where that pop came from, because apparently there were some the market got positive about the whole speculation that the BOJ is not going to go into kind of into an aggressive mode by bringing interest rates back into positive territory. Now, if you've missed the story last year, at the end of last year, everybody started talking that BOJ might actually cut or remove its like this loose policy that they have right now with negative interest rates in order to stimulate the economy. They might go into positive rates in order to maintain inflation. And that, of course, did not really sparkle very well with the stock market. As we know, the rising interest rates are not something that that are very good for the stock market. Now, and given that recently we saw some tragic events in Japan, especially with the earthquake on the 1st of January, so I think that the government right now is spending a lot and trying to rebuild or to sort out the aftermath of the earthquake, and this probably what kind of pushes away the idea of a possible rate hike going into the near future. And that's why the stock market, that's why Nikkei kind of pushed higher, and it moved nicely to the upside and reached my 50% here on the Fibonacci extension. My next target is the 61.8, which is roughly around that 35,500 zone. It's about 1,000 points away, but hey, for Nikkei it could be a piece of cake, so it just need a good boost. In terms of the downside on Nikkei, I think at this point, maybe if it starts falling back below the 34,000, maybe we could start looking at some lower levels. But yeah, I'll at the moment with the downside, we'll have to just pause and wait and see, and if we can get some sort of a signal first. At the moment, I'm not really getting any signal to the downside. It's more to the upside. China 50, so this one, look, we had a nice reversal today, and sorry, not today. Yeah, today. And we did get a nice push back up. We tested the 11,158 territory, which I spoke about previously. I talked about this level. I said that this is my, breakout to the downside barrier. And there we go. We got that move. We got that drift closer to that 11,000 mark, where we're currently getting a little hold up. And now the question is, can we see a push? Can we see a push below this 11,000 mark? If we get that, great for the bears. We could see a further decline. We could see a nice move to the downside because a forthcoming lower low will be confirmed. And look, I mean, I said to you before that it seems like we're in this falling channel pattern, so maybe we could end up traveling towards the lower side of the falling channel. In terms of the economic data, look, oh, by the way, guys, just to let you know, there's not going to be any webinar tomorrow or on Friday, so I'll resume on Monday. And then on Tuesday, we'll have another session with Jin Dao Tai. And I will leave a link in the comment box so that you could check it out, but you can always also find it on the in the section with the upcoming streams. So in terms of economic data for China today, there's not much stuff coming out. I mean, today we still have like the outstanding loan growth, so yes, but I think then the more important data will be for Friday, so I'm not going to be here, but on Friday we get the Chinese CPI numbers. Look, I know some of you sometimes are a little bit skeptical with that, how how trustworthy the numbers are, but actually you can say about any kind of economy, any government. So all the numbers get manipulated eventually. So the only thing is what we mortals can do is just basically try to follow what the market is doing. So yes, I mean, unfortunately, all numbers are manipulated in some point. And, I mean, they're not manipulated only if it's okay for the government to release the actual numbers. So then it's not manipulated. But anyway, that's another different topic. But look, Friday, we'll also get the trade balance numbers from China. So something to keep in mind. That's going to be especially the exports. This is something that people will be keeping a close eye on. Traders, investors will be keeping a close eye on, because in a way this is kind of a gauge of how well the economy is doing, the global economy overall. Because if China is exporting, if their exports are increasing, then basically it shows that there is demand, and companies are buying, and that's why yes, I mean, that's why the economy is doing well. And again, one of the ideas to how to interpret that. So at this point, from the technical perspective, look, I think that I'm still going to lean towards the downside, especially if we do fall and stay below that 11,000 mark. If you've missed all this, that's what I'm referring to, that I'm going to keep an eye on that 11,000 mark. But if you are still in this idea here, which I talked about previously, that I'll start looking at some lower levels on a drop below the 11,275 territory, this worked out perfectly. Yes, we had a bit of a spike back up, but hey, if you manage to maintain that, that's great. ASX 200 Australia. So there we go. After we've rebounded from the 23.6 here, I mean, this was initially my target. It was reached, but then yesterday, not yesterday, the day before yesterday, on Monday, I talked about this and I said to you, look, in order for me to go lower at this point now, I need to see a drop below that 23.6 together with that 7,400 zone. I need the violation of that territory. If I can get that violation, wonderful. I will go lower. I will go towards this downside line initially, which is drawn from the high of the 4th of February, which in a way could play out as a bit of a support area. Because look, I talked about this before, and I said to you that whenever we break a trend line, we kind of tend to revisit it from the other side. And in this case, we did break it with a strong move to the upside, and then we didn't kind of revisit it. So this is maybe the point where we could revisit it, and maybe then we'll see. Maybe we can get a nice little rebound like this, then wonderful. But if we cannot, then it's wonderful for the bears. Then because this could a break below this downside line could open the door towards that 38.2% retracement on my Fibonacci, which is drawn from the lowest point of October to the highest point of January. Just before I go further, good morning in the chat room, guys. Good morning, everyone. I hope everyone's having a wonderful start of Wednesday. Again, just to remind you that tomorrow and on Friday there won't be any Daily Pitch International session, so I will resume on Monday. Now, jumping into Dow. So there we go. Yesterday, okay, this is amazing. Look, I talked about this, and I said to you, even in yesterday's session with Jin, I mentioned about Dow, and I said, look, I have this barrier, the 38,000 mark. I mean, so far it's doing a very good job, because it's also the 50% on my Fibonacci extension. And yes, I mean, which is drawn from the lowest point of March of 2020 to the highest point of 2022, and then to the lowest point of 2022 as well. So yes, in this way, you can see that we are stalling here for now. It seems like we could be forming something of a little bit of a weird head and shoulders pattern. So look, I need to get rid of this line. No longer need it. It worked initially, but now I think we need to focus on something else. And if you're looking at some lower levels, then I would say wait for a drop below the 37,390 zone, somewhere around here, marked by the low of the 20th of December. And if we do drop below that area, then yes, my next target is going to be the 23.6. In terms of the upside, I would say a push about the 38,113 zone right here is required. So if we can get that break, then yes, forthcoming higher high will be confirmed. And this is only from here. This is from where I will consider a nice, good move to the upside, potentially. Yes, I have to say that, because it's, again, it might push higher, it might spike higher, but might create a false breakout as well. So the most important is if we see the body of the daily candle staying above that area, and then we'll go from there. At this point, if you're not really comfortable with anything here, I totally feel you, because again, this for me is also a little bit on the neutral side. So because look, we had a strong rally, and now we're seeing a bit of a ranging moment. So if that's the case, if we're going to start ranging here for quite a bit, Then we look at it from this perspective. The prevailing trend before entering the range was to the upside. That means that this could break out to the upside again. But again, a confirmation break is still needed. So that's why we are playing the waiting game at this point. Let's see which way this one's going to break out to. Just bear with me one moment. Let me just adjust my microphone here. So the S&P 500 very quickly on that one. So yes, it popped back above this upside line. However, as I said to you before, that I need to see a push above the 4,841 territory right here, which is the all-time high, in order to go higher. While we remain in here, I'm not really getting comfortable with anything. With the downside, look, it fell below the 4,743 territory. I mean, I was kind of hoping that it's going to stay here, and it did stay initially. But then it got a boost, and there we go. We saw a nice, good move to the upside. So we've, we ignored this whole area. So I think that now it's time to re-look at it. So first of all, let's get rid of this upside line, no longer needed. In terms of this level right here, I think that it needs to go as well. I think that maybe something else needs to be marked. First of all, I think that the low of last week near the 4,702 zone is something that we need to keep a close eye on. And if we do get a nice clearance of that, then yes, wonderful. I will go lower. In terms of the upside, as I said, a 4,841 territory is something that I need a break off in order to go higher. NASDAQ 100, just bear with me one moment, guys. I need to clear up my nose a little bit. Just bear with me. Okay, still feeling the effects, the post cold effects. I mean, I'm better now, but occasional sneeze comes through, and yeah. Now, look, with the NASDAQ 100. Now, previously I talked about this idea of possible head and shoulders pattern, which initially was working out nicely, but then we found support near the 50-day EMA and we started rebounding back up. Now, at this point, I think that we need to remove everything here and start fresh. Now, we look at it this way. We saw a nice correction back down towards the 50-day EMA, which provided good support. And I've mentioned this yesterday in my video with Jindao that when there was a viewer who asked about EMAs. Look, I said it this way, that on some instruments the EMAs work nicely. On some instruments they don't. So you have to basically kind of try to adjust accordingly. And this is one of the examples where it's kind of working sometimes not. So that's why I'm being a little bit careful sometimes with the EMAs. Like, for example, here, I think that I have a 50-day EMA, and I do like it. But I think that what's happening here, I think, is the 45, which is kind of doing a better job, I think. But again, maybe it's only like a one coincidence moment here. So that's why I roughly remain with the 50, because it kind of goes across the board. And yes, on some instruments it does work, some doesn't. But hey, overall, I think it's still more to the ups or to the bigger side where it works. So at this point, I would say this way, that if you're looking for some higher levels on NASDAQ 100, then wait at least for a pop of the current all-time high in order to get a little bit more comfortable with the upside, yes. But with the downside, okay, I would prefer to wait for a drop below the 16,334. Another thing that I really wanted to quickly double check, and I think that's going to be working out nicely. No, that's the wrong Fibonacci. Just a second, I need the Fibonacci retracement. So what I'm seeing here is that extend lines to the right and versus level labels to the left. There we go. So what I'm seeing right now is that we made a nice 61.8% retracement on the Fibonacci. Now, my question is, if this continues to hold, maybe this has been that that nice correction before another possible leg of selling, because we went down initially strongly. Now we recovered around 61.8, and now the question is, can we see another decline? Well, I will consider that idea if we stay below the 16,000 850 somewhere here on the futures. And if we stay below that, then yes. Or you can check out the same thing on your index, on whatever you're trading, wherever you're trading. So just keep an eye on that, guys. And yeah, if we do stay below this territory, then I will maybe consider actually a move lower. However, probably I'll get a little bit more comfortable with that idea if we do see a drop below the 50% retracement on the Fibonacci right here. And yes, at the same time we would fall below the starting point of yesterday, so opening price of yesterday. So yes, I mean, again, this would work out perfectly for a few sellers. So maybe this move right now, like I said, could be classed as a temporary correction before another possible leg of selling. Just bear with me one moment again. Just need to clear up my nose again. Oh, there we go. And now I can breathe again. So now then, the German index, very quickly. The German DAX, it's stuck. Look, I mean, I'm not going to do anything with it. I'm just going to keep observing the price action. A few adjustments have to be made here. First of all, I think that when I talked about the 16,811 territory, and it did work nicely, and we did push back above this. So, but then we look at this. I mean, we started drifting back down again on the futures. So basically, this level is no longer valid. Previously, it worked out perfectly, beautifully. Now it's no longer valid. So, and also, what I don't like right now here is the fact that let me just remove this arrow. I don't like this one. There we go. The fact that we are stuck in a way. So we could be forming something of a descending triangle pattern, and according to all the TA rules, such patterns tend to break to the downside. But a confirmation break is still needed. So we're looking at this the 16,615 territory right here. And if we do get a nice drop below it, then yes, I will go lower. So while we remain in this territory, I'm not touching this one because I really want to see what's going to happen next. At this point, in order to consider the upside, a break of this downside line here is required. So FTSE 100 very quickly on that one. So the FTSE, we're all watching the GDP numbers, which are going to be coming out on Friday, if I'm not mistaken. Yes, let me just double check that. I think it's going to be Friday. So yes, GDP, UK GDP numbers are coming out. So those are expected. Well, this is the interesting bit. So the month-on-month number is expected to improve, going from negative into positive territory, but the year-on-year figure is expected actually to slide. So let me just double check. Yes, it has been sliding before. So okay. So yes, the number has been on a drift lower actually for quite a lot, and now we're again expecting another drift lower. So okay, let's see what the number is gonna come out at, and if it again isn't if the year-on-year figure is on the lower side, below the forecast, then well, we could expect the FTSE here drifting nicely to the downside towards my upside support line, at least drawn from the low of the 27th of October. Now, let's see if that's going to happen. But coming back to the technical point, I talked about this before, and I said that a drop below the 7,660 territory right here could do the trick for a few more sellers, and maybe we could see, a drift, a nice drift to the 50-day EMA, and then we'll kind of go from there. For the upside, I need to push somewhere above this territory, this area between the 7,724.34 levels. But then also, I don't need to see a false breakout. I need to see a nice, good staying above that area breakout. And then, yeah, we could go for some higher levels. US dollar. Let's have a look at the US dollar. Oh, this one is flirty. It is flirting with this downside line drawn from the high of the 1st of November. So let's see if we can get a nice break above it. So look, if we can, then yes, I will consider a move a little bit to the upside here. Initially, of course, aiming for the 50-day EMA, and then if that gets cleared, then it's the 103.21 zone, or maybe the 100-day EMA. So long story short, guys, for now, I need to see like I said, I need to see that breakout. And as I said, this is something that, we will be watching carefully, because on tomorrow we get the US CPI numbers. Now, US CPIs, everybody's waiting for that, and we want to see how this will play out. I mean, will we get a number higher or lower? Now, yesterday in my video with in my webinar with Jindao, we kind of agreed on one thing, that we're kind of hoping. Well, we don't know, of course. We don't have a crystal ball, but it seems like we could see maybe a number which is a little bit higher than the forecast. So not by much, maybe, but just a little bit higher. So, and if that's the case, now this is where the stock market could reverse to the downside, and you could see US dollar pushing nicely through this barrier right here, through this downside line, maybe this 50-day EMA as well, and yeah, traveling a little bit more to the upside. So the reason is that if we see a little bit of a tick on inflation to the upside, then this would push the Fed towards they're currently saying that they want to do 3 rate cuts, but I think now they're going to get pushed to maybe 2 rate cuts by mid of this year. So this is how it works out beautifully. Yeah, at the moment, it's something that we're watching carefully. I'm watching myself, but in general, I have this kind of, I'm leaning a little bit more towards the upside. However, I have to stick to the rules, because at the moment the downside line is the one that I'm watching, and it has to be, it has to be respected. But if we're now flirting again with this downside line, maybe the bulls really want to drag this one higher. So at the moment I'm watching this 102.38 zone as well, which is a nice good area of resistance, so marked by the lowest point of November. If that gets cleared, wonderful, I will go more to the upside. Now let's jump into gold. Gold, it drifted carefully lower. It fell below this upside line. And look, I talked about gold yesterday in our webinar, and we were at that point, we were kind of holding above this, or near this upside line drawn from the low of the 6th of October. And then I said that, look, if we're going to break it eventually and we're going to stay below it while we remain in between these 2 trend lines, I'm not going to do anything. I need to get rid of this Fibonacci for now. There we go. So I'm not going to do anything if we remain in between these 2 trend lines. But if it starts breaking through one of the sides, now that's where it could become a little bit more interesting. Look, if you've missed this move, don't rush into things yet, because look, we are currently getting a nice hold up near the 50-day EMA, which is on my chart shown as the red line. If that gets cleared, then yes, I will aim for that 2015 territory, which I'm seeing as a good area of support. But if that one gets cleared, well, that's where it could open the door towards the 100-day EMA initially, and then maybe lower. So, and this could come and could align nicely with the US dollar, pushing to the upside. But again, let's not rush into things. Let's wait and see. Silver. Silver is stuck here. I mean, I had this level previously, this 22.96 zone. I said that if we do drop and stay below it, I'm going to lean towards the downside. And so far, we are examining that. Exactly that. So at the moment, yes, I'm leaning a little bit more towards the downside, but as you can see, I mean, there's another area of support here, this 22.84. So if you've missed that move, let's say, you can keep an eye on this one, and if we do clear this 22.83 territory, then yes, I will go towards that 22.51, and then we will take it from there. So long story short, I would say, while we remain in here, while we remain below this downside line, below all my EMAs, there is a chance, yes, to go lower. However, if we continue to trade above some of these important hurdles, important support areas, then I think that I will have to remain a little bit on the cautiously bearish side. I mean, maybe even more to neutral, just to see if this is not going to rebound back up here and, you know, travel higher. So while it basically is staying in this area, I'm just not touching it. Oil, jumping into oil, guys. So yes, oil is stuck here. So look, I'm not going to spend too much time on this one because I already talked about it, about oil on Monday. So it seems like we're coiling up, so we need to see a clearance of one of the sides here of this triangle pattern, I would say. And then, yeah, we can consider the next short-term directional move. Natural gas pumped higher. Look at this animal. Boom. It was a nice, beautiful move here. My target got reached the 3.27 territory. So that's wonderful. And what can I say? It stayed above all my EMAs here on the daily chart and reached my target. Mission accomplished. So now what's next? Well, to be honest, I'm still kind of leaning towards the upside, actually, especially if it pops above the 3.27 territory, then yes, I'll target the 3.60 or maybe even higher than that. So I cannot really say anything else. I mean, at the moment, everybody's like freezing in US and Europe. So yes, natural gas is the one that is keeping everybody warm. So yes, at the moment, that's my game plan. Look, of course, at some point there will be a correction back down, but I think that at this point, I will consider a correction lower if we do fall back below the 200-day EMA. Sugar, you know, if gas is keeping, natural gas is keeping us warm, sugar is keeping us positive. You know, in general, of course, yeah, sugar is not very good, you know, but it's like a drug. It is like a drug, so as you know. But look, let's have a look at what's happening here on the stock, or on the stock market, on the commodity market here. And sugar as a commodity is pushing back up. It again revisited the 23.6% retracement here on the Fibonacci, which is drawn from the highest point of November to the lowest point of December. I talked about this previously. One of my, like I said, this idea worked out perfectly. But then I said, after we retraced back down, I said, look, at this point, if I want to go higher, I need to wait for a push of the 23.6. I'm not rushing into anything yet because maybe this is going to end up ranging here or something like that. So if this provides good, strong resistance, maybe, like I said, it could drift back down again, start moving sideways, and then yes, then we will take it from there. But the moment I am watching this territory, this 23.6, let's see if that's gonna clear it or not. Bitcoin. So let's jump into the madness. So Bitcoin. Yesterday, as you know, or if you don't know, so the whole Bitcoin ETFs saga continues. And yesterday it was fun to watch. Like at the after the stock market, the U.S. stock market closed, we suddenly see a surge in Bitcoin, and apparently the SEC Twitter account got hacked, and they said that they posted that they've approved the Bitcoin ETF, and this is what we saw initially. But then we saw that strong move to the upside, and but then the chairman of SEC came out saying that no, that was not approved. He tweeted it from his account. And yeah, there we go. We drifted back to the downside very quickly. So talk about manipulation, right? I mean, and this is, I'm coming back to the point which I've made previously in the beginning of this week. I said that I wasn't even actually expecting to get an approval this month straight away after New Year. I mean, I understand that there are like companies which are pressuring the SEC, but I think that this is where, okay, it's only me. I'm only thinking this now. In a way, yes, there's a lot of companies, big companies, which are big players, which are pressuring the SEC to approve the Bitcoin ETF as quick as possible. However, I think that the SEC will decide to play the game a little bit because it's a reputational thing. Because if this gets approved very quickly, then everybody will think that the SEC is losing credibility, and they are losing their power. That means they can be a bit of a pushover when it comes to big companies. So basically, if you're the biggest asset manager in the world, then you can just do whatever you want. Basically, you're the one who's dictating you know, what SEC should be doing. So that's what I'm saying. So this is where I think that the hype around getting the approval of the Bitcoin ETF this week. It might not happen. However, again, I'm not sure. Of course, I don't have, like I said, a crystal ball, only my leather ball, as I keep on saying. Yeah, I don't want to rush into things yet because, again, this is way too fiddly and tricky. And again, yes, it seems like we're close to getting the approval, but after these events, after the account got hacked, I think that they will think of a statement of some sort saying that, you know what, we have to postpone it for this week because we need to figure out, you know, we need to understand, like, because our security was breached. That's why we need to have everything in order and before we could do something. So yeah, it's all a bit of a nice game. It's a political game, and I think that a lot of lawmakers don't like the idea of Bitcoin ETF, so that's why maybe they're pushing towards this, kind of, you know, slowing it down a little bit. So in general, it's, you can have your pros and cons, you know, for everything, and you have your pros for one for both sides, and both sides have their pros, and both sides have their cons. So it's a bit of a tricky one with the Bitcoin ETF. I mean, maybe it's not going to be, because it can be manipulated very easily, and that's what maybe the SEC is worried most about. So yeah, at this point, I think that, looking at the technical picture, I talked about this idea of a possible rising wedge pattern, but I think now it's something else. I think that this upper side needs to go. I think it's better just to stick to this upside line here and keep an eye on it. So at the moment, we're seeing a nice little correction back down, which is fine, which is okay. Look, if we somehow stay above the 45,940 zone right here, which is the high of the 2nd of January, then I will continue targeting the upside. However, if we start falling and stay below it, I'll consider a bit of a retracement, a larger correction to the downside towards this upside line drawn from the low, the 14th of November. Bitcoin Cash, nice reaction here as well. So look, on Monday I've posted this and this idea, and I told you in this here that I will not be doing anything while we remain in this range here. I'm going to start considering higher levels or lower levels if we do break the one of the sides here of this range, and then I'll consider the next short-term directional move. At this point, I am just observing the price action. Ethereum, very quickly on that one. Ethereum is actually, Ethereum is doing much better because the whole hype is right now around Bitcoin and this negativity that surrounds Bitcoin ETF. It's actually somehow playing out nicely for Ethereum, and it seems like it's like everybody forgot about it, or just a few are pushing it nicely to the upside. And there we go, we're near this barrier again, this 2,407 zone. If we stay below this, then maybe we'll see a drift back down. This upside line needs to go, no longer needed. I think that we are currently in this like this little range here. Let me just grab this highlighted zone and I'll reuse it. I will reuse it right here. Let me just zoom in here. There we go. So actually, we're kind of in a box here right now. Something like that. So we need to see a clearance of one of the sides of this range in order to consider the next short-term directional move. That's it. That's pretty much it. Honestly, nothing else. I'm not gonna try to even improvise here with anything else. Polkadot. There we go. We had a nice push higher, but then we found good resistance near this downside line again, which is it's skewed a little bit from on my chart here. So yeah, this one's drawn from the high of the 22nd of December, and yes, we're drifting to the downside. Look, I am leaning towards the downside. However, I will be leaning more towards the downside if we do break below this upside line drawn from the low of the 19th of October. For the upside, I need to see a push back above this upside line and above this downside line. But actually, you know what? I think that even this upside line no longer needed. I think just a push, a nice good push above this downside line and a push above the yesterday's high near the 7.50 zone, 53, something like that. Yes, I mean, we can just keep an eye on that 7.50. If If we clear it, great. I will get a little bit more comfortable with the upside. AUDUSD. So this one's a little bit of a mess, and I think that it is time to remove everything because the Fibonacci's no longer work. I think that we need to just stick to some key support and resistance barriers. So for now, from the very short-term perspective, I will keep an eye on these levels. So we'll keep an eye on for the upside. I need to push above the 0.6735 in order to consider a bit of a move to the upside. Not saying that crazy radical move higher. No, just a bit of a move to the upside. Or maybe it could align actually with the break of this downside line here. I don't know. Again, for now, it's not there yet, so maybe we'll have to just wait a little bit here with the upside, especially with the fact that the US dollar wants to go, or it seems like it could go higher. In terms of the downside, yes, this is the still the scenario which is still valid. So a drop below the 0.6677, yes, could attract more sellers. The next target is the 50-day EMA here, and if that gets cleared, the 100 and the 200-day EMAs could be my next target. And then we'll go from there. AUDJPY, this one's beautiful because we're getting a nice rebound from that 50-day EMA, as you can see here, together with this 96.51 zone. I talked about this yesterday and actually the day before on Monday. That I'm keeping an eye on this one. We did get a nice false breakout. This is wonderful for the bulls. It just proved that this is an important area of support, and we're seeing a nice strong rebound from it. So this idea is working out. I'm targeting the 97.58 territory for now, and together with this downside line, which I'll draw it this way, I think. This one's taken from the high of the 15th of November. So that's going to be my next target, and then we'll take it from there. If we clear it, if we clear the downside line, wonderful. I will go a little bit more towards the upside. NZDJPY. Look at this beautiful thing. Guess what could be happening right now? We could be seeing a nice pop. Well, I said to you that I've mentioned this pair on Monday as well, and I talked about this idea that look, we could be seeing here a nice maybe a little bullish flag, something like that, but in general, everything looking quite positive. So I will consider a move higher if we do get a nice pop above this 90.44 territory and we stay above it as well. If we stay, then yes, my next target is the 91.52 area marked by the highest point of December, and then we'll take it from there. For the downside, a break below this upside line would be needed in order to consider a move lower. CHFJPY. So, CHFJPY is something that I am keeping a close eye on because, look, I like it very much, and so far it is quite technical, and it's respecting the upside line here, the steeper one drawn from the low of the 14th of December. So in order for me to go higher, a push above the 170.54 territory here is required. If we can get that pop, then yes, wonderful, more buyers could join in. In terms of the downside, a break of this upside line here is needed, and if that gets cleared, then yes, my next target is the 50, the 100-day EMA, and the this upside support line drawn from the low of the 20th of March. So, long story short, if you're looking for some higher levels, then I need to see a pop above this 170.54 territory in order to go a little bit more to the upside. So at the moment, I'm watching this one. Let's see if that's going to happen. USDJPY, there we go. We're pushing back above this 38.2% retracement on the Fibonacci, which is great. Currently getting a hold up near the 50-day EMA, but that's fine. If that's just seen as a temporary little obstacle on the way higher, then yes, my next target is the 50% retracement here on the Fibonacci, which is roughly around that 146.22 territory, something like that, and then we'll go from there. Or should I say 20 maybe zone. So yeah, and then we'll go from there. So yeah, I like this area. Let's wait and see. I will continue targeting that upside as long as we stay above the 38.2. In terms of the downside, I would wait for a drop below that 23.6 here again, which is around the 143 zone. If we do fall below this, I will go lower. USDCHF very quickly. So yes, we're pushing slowly to the upside. Again, similar chart as with similar chart like the the DXY, and yes, we're seeing a nice good push higher here. Let's see if we can break the downside line. If we can, wonderful. I will get a little bit more excited with the upside, aiming for the 50-day EMA and then maybe the 100-day EMA. But again, a break of this territory is still needed. Excuse me. For the downside, the 0.8457 is something that I'm watching here for the downside. A drop below this may attract a few more sellers into the game. USDCAD, just a quick update here. So we reached the 50% again. So now if we can clear the 50% retracement here on the Fibonacci, then I'm going to be a little bit more happy, because then it could open the way towards that 61.8 marked by the 50, which is near the 50-day EMA. So yeah, this is around also near the 1.34. Cannot see this number. Where is that number? Low left. There we go. So the 1.3450 is a nice good target. The next target, which is near that 50-day EMA. So let's see if we can get a nice good test of that area. In terms of the downside, a drop below the 38.2 could attract more sellers, and yes, we could then consider a move towards the 23.6 and maybe even lower. But at this point, we're stuck here. We're kind of leaning a little bit more towards the upside, so let's see if we can get that move towards that 50-day EMA and that 61.8 GBPUSD. So there we go. We're stuck. So look, I'm gonna keep an eye on this one for now. I'm just gonna not do anything, but excuse me. But as I said before, that if the US dollar is willing to go higher, then we could see this pair moving nicely to the downside. Now, I also mentioned to you on Monday that we could be seeing something of a weird head and shoulders pattern right here. So this one, we have the left shoulder, we have the right, we have the left shoulder, we have the head, we're now forming the right shoulder. So maybe this could actually end up drifting lower towards this potential neckline, of which is around the 1.2615, and it also coincides nicely with the 50-day EMA. And if that gets cleared, this could be a bigger possibility for bears. More of them could join in, and they could drag the pair a little bit lower here towards, well, this is where an interesting bit comes in here. So they could drag it towards this 1.25, well, actually 1.25 zone, which is not far from the 200-day EMA as well. So this area could also actually be seen as a possible neckline of a complex head and shoulders pattern, because we would then have a left shoulder here, a complex head, and then we would have to build a right shoulder again. So don't rush into things, guys. For now, this is just an idea, theory, so maybe it's going to work out, maybe not. In terms of this, I mean, I will have to remove this line, no longer needed. So yeah. If we are looking at some lower levels, then yes, a break through the 1.2615 territory here is required for the upside. A push above the 1.28 zone could do the trick for a few more buyers. EURNZD very quickly on this. So we're still stuck. I'm getting annoyed with this one, but hey, it's part of the game. So we're still struggling with my 1.7463 zone. We're not really moving away from it, but we are struggling to overcome it. So I'm still gonna watch it because I like it on the weekly chart. So this is the pair which you need to look at the weekly chart, and you can see that somehow these levels are playing out nicely. So for the downside, the 1.7463 territory is still working, and for the upside, the 1.2076 zone is also still working. So, and then yeah, if we do pop above this, I'll consider a move towards that 1.7730 zone, somewhere around here. EURJPY, again, similar story as with other Japanese yen pairs. We are showing willingness to go higher. However, we need that confirmation break still. So if we don't get that pop above the 158.57 territory right here, and we don't stay above it, then yes, I'm not really examining any higher levels. If we can get that move, wonderful, I will go higher. And finally, EURUSD. So EURUSD is also somewhere in a bit of a limbo because we are stuck. We are stuck here above this upside line, but but it's still, I mean, like I said, again, coming back to the whole dollar situation, if the US if the US dollar starts accelerating rapidly, then we could see Euro USD falling off the cliff here, potentially aiming for my 100-day EMA, the 200-day EMA, because we would already be below this 50-day EMA shown as the red line. So a break below this upside line and a break below the 50-day EMA could, yes, attract a few more sellers into the game, guys, and we could even lead to a larger correction to the downside towards the 1.0756, and then we'll take it from there. For the upside, I need to see a push above the 1.1009 in order to go higher. So yeah, at the moment, that's the situation. That's the weird situation we are in. So waiting for the next big catalyst to kind of make a trigger in the US dollar, because there's not much stuff coming out from Europe this week, so it's mainly the US data which could be driving. So that's it, guys. That's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate that. Just to let you know that we will be having the webinar next week on 16th of January. So check us out with Jin Dao Tai. So that is, let me just get rid of myself here. That is at 3 p.m. GMT plus 8, which is basically the same time as this webinar starts, 7 o'clock GMT time. So in the morning. So guys, look, thank you very much. Just to let you know that this was the last session of my webinar session this week. So I hope you found it useful. Thank you very much for watching and listening. I really appreciate that. If you want to catch me, on Monday, I'll be more than happy to see you here, guys. And yes, join in. And the most important, please promise me that you will stay safe, you'll have your stop losses in place, you'll only risk what you can afford to lose, you will not overtrade, and then everything will be fine. So I'll see you on Monday, guys, and I'll see you on Monday. Thank you very much for tuning in today. Really appreciate that. Bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.